Yo, what's up, everyone? Today we're looking at the financial statements of Gandhi Limited for the year end 28th February 2017. Now, as you can see, we have a lot to do. There's an income statement, there's balance sheet notes, there's equity and liability section in the balance sheet. So we have lots to do. We cannot spend too much time on one thing. So I'm going to try and pick up the pace. I also want to say that this question is really not easy. There were so many adjustments that whoever designed this paper made to catch you. They wrote this paper so that you do not get full marks. So, the important thing is that we're doing it now and you make notes for the future. So if you ever see questions like this again, you know what to do. But okay, plenty of talk. Let's get started. So you were provided with the answer book, and we can see we have a gross profit figure, there's a commission income, salaries, depreciation, and they gave us income tax. So our job is to do everything that's not there. Let's get started. So first is sales, and if we look in our additional totals, our trial balance totals, we can see that there is no sales here, and there's no cost of sales either. But when we read B, it says that the gross profit for the year ended 28th February 2017 was 3,150,000. And they've already written that in for us, right? But now they tell us that a markup of 60% on cost was achieved. So very quickly, I'm going to show you how I calculated. I want to remind you that there are many different ways of calculating things. If you didn't calculate it the way I did, that's okay. If you got the final answer, that's what's important, and your way is probably correct too. But what I did was I said 3,150,000, and then I said that amount divided by 60%. So once again, there are different ways of doing this. If you get the final answer, that's okay. Remember, I've had many years of doing accounting, so I've learned easier ways of doing things. So, make notes, learn it, and you'll be fine. So this should give us the cost of sales now of 5,250,000. And then you can say, hey, well, we have the gross profit, we have the cost of sales. If we add this and this, we should be able to get our sales amount. And that's it. So that's pretty easy. And just with one adjustment or one information point, we managed to do sales and cost of sales. And I'm pretty sure this is probably for 2 or 3 marks, so important. Okay, I hope you're still okay. I hope you're following. We're gonna move on now. But anytime you have questions, please message on the group and I'll be happy to answer. I'm going to try to keep each video to 5 minutes, which means I have 1 minute left. Okay, so it says that stock taking on the 28th of February reflected trading stock of 207,500 on hand. So we actually had 207,500, but we thought we had 231,700. And now we have to see whether we have a surplus or a deficit. And a surplus is income, a deficit is an expense. And because we thought we had more, but we actually have less than that, it's a deficit because we don't have as much as we thought. So we're going to go to our operating expenses. We're going to write trading stock deficit because we know it's a deficit now. And we thought we had 231,700, but we actually had 207,500. okay? And that means that our deficit is 24,200. Okay guys, I'm gonna move on to the next video. I hope you're still okay